Hey everyone, welcome back. Today we're doing a deep dive into HP Inc.,
HPE.
ticker symbol HPQ,
FEQ.
to see if it's a stock worth your attention.
Hmm.
We've got a hefty financial report in front of us, fresh insights from their latest earnings call,
Right.
plus some analyst opinions to unpack.
Yeah, what's fascinating here is
Yeah,
that HP seems to be at a crossroads. They're known for their PCs and printers,
Right.
but they're making this big push into AI.
Right.
The question is, can they pull it off?
It feels like every company is jumping on the AI bandwagon these days.
Yeah.
So what makes HP's approach different?
That's what we're here to find out.
Oh.
If you look at HP's stock, it's currently at $34.66,
Okay.
a bit above its estimated fair value.
Above, okay.
They've seen some decent growth recently, 2% year-over-year revenue,
Right.
driven mainly by, you guessed it, personal systems and print. But to understand if this is sustainable, we need to look beyond the numbers.
Okay, let's unpack that growth. Are people suddenly buying more PCs and printers? What's driving this?
Well, in Q4 2024,
Okay.
a big chunk of growth came from their commercial PC business.
Okay.
They're seeing gains in both unit sales and market share,
Okay.
suggesting they're successfully targeting businesses,
Right.
which tend to be more stable than relying solely on individual consumers.
Oh, that makes sense. Businesses are always upgrading their tech.
Yeah.
But what about their long-term strategy? You mentioned a push into AI. How does that fit into the picture?
This is where it gets interesting. HP is talking about providing solutions for the future of work,
Mm-hmm.
and they see AI as a key part of that.
Okay.
They're integrating AI capabilities into their devices and software.
Okay.
Things like the HP AI Companion, a generative AI application,
Mm-hmm.
and even an AI-powered business notebook.
Okay, so they're not just slapping an AI sticker on their old products. They're trying to solve real problems for businesses, like improving productivity and collaboration.
Yeah.
But are these solutions actually innovative, or are they just playing catch-up?
That's a great question. And to answer that, we need to understand the challenges HP is facing.
Okay.
Their guidance for fiscal year 2025
Mm-hmm.
projects a decline in the print supplies market.
Okay.
It's not a huge surprise, as people just aren't printing as much as they used to.
Yeah, printers are practically museum relics these days.
Yeah.
So if printing is declining,
Right.
that puts even more pressure on their AI strategy to deliver.
Exactly. They can't just rely on their old cash cows. They need to diversify and create new revenue streams.
Right.
And this is where investor concerns start popping up.
Yeah.
HP is planning to use share buybacks to boost their earnings per share.
So instead of investing that cash in research and development, they're buying back their own stock to make their earnings look better. That sounds a bit like a short-term fix.
It can be seen that way. And it raises questions about their long-term vision. Are they just trying to appease investors in the short term, or are they truly committed to becoming an AI-powered company?
Definitely something to consider.
Yeah.
But before we judge them too harshly, let's not forget the competition. They're not the only ones trying to navigate this changing landscape.
Absolutely. HP is facing some serious heat, especially in the print market.
Okay.
Their Japanese competitors are putting pressure on their margins with aggressive pricing.
So it's not just about having cool, innovative products. It's also about being able to compete on price. And with all these challenges, what are the experts saying? What do the analysts think about HP's future?
Well, analyst opinions are all over the map.
Yeah.
Price targets range from $24 to $40,
Wow.
with an average of $35.80.
Okay.
This variation highlights the uncertainty surrounding HP's future.
So basically, no one can agree on what HP is really worth. It seems like a risky bet.
It does come with its share of risks, but remember, even with these challenges, HP has been generating strong free cash flow.
Wait, hold on. Back up a second. What exactly does free cash flow mean?
Think of it as the cash a company has left over
Okay.
after paying its operating expenses and capital expenditures.
Gotcha.
It's the money they can use for things like dividends, share buybacks,
Mhm.
debt reduction, or ideally, investing in future growth.
So they've got cash to play with, which could be a good sign. But the question is, are they using it wisely? Are they striking the right balance between rewarding shareholders and investing in their future?
That's the million-dollar question. We'll delve deeper into that as we continue our deep dive. But for now, let's shift gears and talk about some of the specific ways HP is incorporating AI into their products and services. We touched on the HP AI companion earlier,
Okay.
but let's explore that a bit further. It's designed to be like a personal AI assistant
Okay.
built right into your device. Imagine having an AI that can help you draft emails, summarize documents, or even brainstorm ideas.
That does sound pretty handy. It's like having a superpowered intern at your beck and call. But is this something people actually need, or is it just a gimmick?
That's what HP is banking on,
Yeah.
that people will embrace this new way of interacting with their technology.
Yep.
It's still early days,
Right.
but if they can successfully integrate these AI features into their devices and make them truly useful,
Yeah.
it could be a game changer.
Okay, so they're trying to revolutionize the consumer experience.
Yeah.
But what about the business side? How are they leveraging AI to solve problems for companies?
They've actually made a strategic acquisition that ties directly into this.
Okay.
They purchased a company called Vyapta,
Vyapta.
which specializes in workforce experience platforms.
Okay.
Essentially, they're using AI to improve the employee experience,
Okay.
particularly in a world where hybrid work is becoming the norm.
So they're helping companies manage remote teams, track productivity, and make sure everyone's on the same page, even if they're not physically in the same office.
Yeah.
That's pretty clever, considering how much the workplace has changed in recent years.
Exactly. They're recognizing the trends and adapting their solutions accordingly,
Right.
and they're not stopping there. They've also launched new AI-powered devices specifically for businesses,
Okay.
like the EliteBook X AI notebook.
So it seems like they're covering all their bases,
Yeah.
from consumer products to business solutions.
Yeah.
But with all this talk about AI, let's not forget about their bread and butter, PCs and printers.
Right.
Their recent earnings report showed some positive signs, right?
Yes, they did manage to squeeze out some growth
Okay.
for the second consecutive quarter.
Mm-hmm.
They posted a 2% year-over-year revenue increase.
Okay.
But it's important to dig a little deeper and see what's driving that growth.
Right, because 2% isn't exactly setting the world on fire. Is this sustainable growth,
Right.
or are they just hanging on by a thread?
Well, the growth in their commercial PC business is a positive sign.
Businesses need to upgrade their tech regularly.
Right.
So that provides a more predictable revenue stream than relying solely on individual consumers who might hold onto their devices longer.
Makes sense. But what about the printing business? I thought that was a dying market. Are people still buying printers?
Believe it or not,
Yeah.
their printing revenue actually grew for the first time since fiscal year 2021.
Wow.
Strong performance in supplies and industrial graphics contributed to this unexpected upswing.
Wow, that's a surprise. I guess there's some things you just can't do digitally.
Yeah.
But are they expecting this printing revival to last?
Well, they're cautiously optimistic about the PC market,
Okay.
projecting faster growth than in FY24.
Okay.
But they're also realistic about the printing market,
Okay.
acknowledging that it's expected to decline in FY25,
Okay.
particularly the supplies segment.
So they're enjoying a little bit of a printing renaissance right now.
But they're not getting complacent. They know they need to find other ways to grow. What about their earnings expectations? Are they forecasting any significant changes?
Their non-GAAP diluted net earnings per share,
Mm-hmm.
or EPS,
Okay.
are projected to be in the range of $3.45 to $3.75 for FY25.
Okay.
However,
Yeah.
a significant chunk of that projected growth is expected to come from, you guessed it, share buybacks.
Ugh, there's that share buyback thing again. It feels like they're relying on financial engineering rather than actual business growth.
Yeah.
Are there any other red flags investors should be aware of?
Well, those pesky commodity cost pressures we mentioned earlier are
Yeah.
expected to persist into Q1 of FY25,
Okay.
potentially impacting their operating profit. And remember that intense competition,
Yeah.
especially from their Japanese rivals in the print market, is still a major factor.
So even if they do manage to innovate with AI,
Right.
they still have to deal with the realities of a tough and unpredictable market.
Exactly. It's a complex equation with a lot of variables.
It sounds like HP's future is hanging in the balance.
Yeah.
They're trying to embrace this new AI-driven world
Yeah.
while still grappling with the challenges of their legacy businesses.
Mm-hmm.
It's a high-stakes gamble, isn't it?
Absolutely. And the outcome is far from certain.
Okay, so we've covered a lot of ground.
Mm-hmm.
HP is clearly at a crossroads trying to balance their legacy business
Mm-hmm.
with this big bet on AI.
Right.
But before we wrap up, I want to circle back to something that's been nagging at me this whole time.
Yeah.
The share buybacks.
Yeah.
It feels like a bit of a cop-out, doesn't it?
It's definitely a point of contention among investors.
Yeah.
Some see it as a way for HP to artificially inflate their earnings per share
Right.
and appease shareholders in the short term,
Yeah.
rather than focusing on sustainable long-term
But
growth.
they're saying, hey, we don't know what the future holds, so here's some cash back while you wait and see.
Right.
It doesn't exactly inspire confidence in their ability to innovate and compete in the long run, does it?
That's a fair point. While share buybacks can be a legitimate way to return value to shareholders,
Right.
especially if a company believes its stock is undervalued.
Right.
The concern with HP is that it seems to be a major part of their growth strategy.
Yeah.
The question is, are they sacrificing long-term investments,
Yeah.
like research and development or strategic acquisitions,
Right.
in favor of these short-term gains?
Right, because if they're not investing in their future, they're essentially betting that their existing products,
Right.
with a sprinkle of AI, will be enough to carry them through.
Mm-hmm.
And in a rapidly changing tech landscape, that seems like a risky gamble.
It is, and that's why it's so important for investors to look beyond the surface and really analyze what's driving a company's growth.
Right.
Is it coming from innovation and expansion into new markets?
Yeah.
Or is it primarily fueled by financial engineering tactics like share buybacks?
So what's the takeaway for our listeners who are trying to decide whether HP is a stock worth considering?
I think the key is to approach HP with a healthy dose of skepticism.
Okay.
Don't be swayed by the hype surrounding AI. Dig into their financials, their strategy, and their competitive landscape.
Mm-hmm.
Look for signs that they're genuinely committed to innovation and long-term growth,
Right.
rather than just short-term gains.
And remember, there's no crystal ball when it comes to investing.
Sure.
Every investment carries risk.
Yeah,
And HP is no exception.
definitely not.
But by doing your research and understanding the company's strengths, weaknesses, and potential, you can make a more informed decision that aligns with your investment goals and risk tolerance.
Exactly. This deep dive is meant to be a starting point for your own research,
Yeah,
not a definitive buy or sell recommendation.
of course.
Ultimately, the decision of whether or not to invest in HP is yours.
Well said.
Yeah.
So what stood out to you about HP? What questions do you still have? Let us know in the comments. And if you found this deep dive helpful,
Yeah.
make sure to subscribe to our channel and hit that bell icon so you don't miss out on future episodes. We're here to help you navigate the complex and ever-changing world of investing, one deep dive at a time.
Absolute.
Thanks for joining us.
Until next time.